Now speaking, Rob Lin, Head of Investor Relations. Welcome to Alibaba Group's June quarter 2023 results conference call. Today, we have Daniel Zhang, Chairman and CEO, Joe Tsai, Executive Vice Chairman, Toby Xu, CFO, and Trudy Dai, CEO of Taob and Tmall Group, joining us. Any forward-looking statements that we make on this call are based on assumption as of today, and we do not undertake any obligation to update these statements except as required under applicable law. Please note that certain financial measure that we use on this call such as adjusted EBITDA, adjusted EBITDA margin, adjusted EBITDA margin, non-GAAP net income, non-GAAP diluted earnings per share or ADS, and free cash flow are on a non-GAAP basis. Our GAAP results and reconciliations of GAAP to non-GAAP measures can be found in our earnings press release. Unless otherwise stated, growth rate of all stated metrics mentioned during this call refers to year-over-year growth versus the same quarter last year. Now speaking, Daniel Zhang, Chairman and Chief Executive Officer. Hello everyone, thank you for joining our earnings call today. We started the fiscal year with a robust quarter. The latest macro data indicates some uncertainties in the pace of post-COVID recovery, but as economic and consumer activities continue to resume, our businesses demonstrated encouraging trends of resilience, confidence in a consumption recovery and the significant potential from an integrated development of the digital economy and the real economy. Our revenue reaching 234 billion Chinese yuan, growing at 14% year-over-year. Our adjusted EBITDA also increased by 32% to 45.4 billion Chinese yuan, showing progress in our focus on operating efficiency. Now, let's dive into the results of our major businesses. Trudy will provide updates on the Taob and Tmall Group. Now speaking, Trudy Dai, Chief Executive Officer, Taob and Tmall Group. In the June quarter, our Taobao app's user base experienced rapid growth, with an average monthly increase of 6% or higher year-over-year. Our DAO leadership in the e-commerce space continues to widen, as more users choose to use the Taobao app. We have seen a clear trend of merchant growth on Taobao and Tmall, with a significant number of new merchants quickly contributing to our value for money battle. Merchant confidence in doing business on our platform has increased significantly, leading to a growth in merchant spending. We have also upgraded our merchant tools with AI, enhancing the shopping experience for users. As a result, the Taobao and Tmall Group recorded close to 80 billion Chinese yuan in CMR this quarter, a year-over-year increase of 10%. Despite our investments in users, the value for money battle, in AI, we recorded a 9.1% year-on-year increase in adjusted EBITDA. During the 618 Taobao and Tmall Shopping Festival, we achieved balanced growth in the number of paid orders and average order size. We also launched the Taobao Good Price Festival, attracting more users and promoting value for money offerings. Our three key strategies of putting users first, building a prosperous ecosystem, and realizing technology-driven innovation are starting to yield results. Moving forward, we will continue to meet the needs of Chinese consumers, invest in the value for money battle, and advance our AI capabilities. We are confident in the long-term success of the Taobao and Tmall Group. Now speaking, Daniel Zhang, Chairman and Chief Executive Officer. Alibaba International Digital Commerce Group, AIDC, achieved 41% overall revenue growth this quarter, with its retail business experiencing 60% revenue growth year-over-year. This was driven by solid order growth in international retail marketplaces, which saw a 25% year-over-year increase. AIDC's adjusted EBITDA loss decreased by 70% year-over-year during the quarter, thanks to enhanced monetization and operating efficiency. Looking ahead, AIDC plans to expand its choice model and improve localized experiences. The local service group saw a 30% year-over-year revenue growth, driven by strong order growth in L.me and AMAP. AMAP released new product features, such as traffic light countdown and tunnel navigation, which were well received by users. L.me focused on enhancing its service capabilities and maintaining positive unit economics. Cainiao's revenue grew 34% year-over-year, primarily due to increased volume in international fulfillment solution services in AliExpress. Cainiao will continue to invest in building a logistic network and leveraging Alibaba's digital commerce use cases. Alibaba Cloud's revenue grew 4% year-over-year, with strong demand for AI services. Alibaba Cloud will focus on forming a full-stack product and technology leadership and benefiting from AI applications in all industries. The digital media entertainment business achieved 36% revenue growth in its first-ever quarter of profitability. This was driven by growth in subscription revenue, higher revenue contribution from Damai and Tao Piao Piao, and the launch of blockbusters by Alibaba Pictures. Alibaba made progress in social responsibility, achieving solid emission reduction and driving emission reduction across its business ecosystem. The company's new governance framework and capital management programs are underway, with updates to be provided in the future. Lastly, this will be the final earnings call for the current chairman and CEO, who expressed gratitude for the trust and support of shareholders and analysts. The new management team will continue to lead the company's growth. Now speaking, Taob Xu, Chief Financial Officer. In the past quarter, we achieved a strong financial performance with a 14% increase in total consolidated revenue to 234.2 billion Chinese yuan. Our consolidated adjusted EBITDA also increased by 32% to 45.4 billion Chinese yuan. Non-GAAP diluted earnings per share saw a significant increase of 48% to 2 Chinese yuan and 17 fen. We also repurchased $3.1 billion worth of our shares, accounting for 1.4% of total shares outstanding. Our strong free cash flow of 39.1 billion Chinese yuan or $5.4 billion puts us in an excellent position to capture new opportunities. Now let's look at the segment results. The Taobao and Tmall Group experienced strong revenue growth of 12% to 115 billion Chinese yuan, driven by an increase in paying merchants and online physical GMV. The group's adjusted EBITDA increased by 9% to 49.3 billion Chinese yuan. The Alibaba International Digital Commerce Group saw a 41% increase in revenue to 22.1 billion Chinese yuan, primarily due to the solid performance of major retail platforms. The group's adjusted EBITDA loss narrowed to 420 million Chinese yuan. The Local Services Group achieved a 30% revenue growth to 14.5 billion Chinese yuan, driven by robust GMV growth and rapid order growth. The group's adjusted EBITDA loss narrowed to 2 billion Chinese yuan. Total revenue from China grew 34% to 23.2 billion Chinese yuan, primarily contributed by the increase in revenue from international fulfillment solution services and domestic consumer logistics services. China's adjusted EBITDA turned profitable at 877 million Chinese yuan. The Cloud Intelligence Group saw a 4% increase in revenue to 25.1 billion Chinese yuan, driven by Alibaba consolidated businesses and customers within various industries. The group's adjusted EBITDA increased by 106% to 387 million Chinese yuan. The DME Group achieved a 36% revenue growth to 5.4 billion Chinese yuan, driven by the growth of online and offline entertainment businesses. The group's adjusted EBITDA turned profitable at 63 million Chinese yuan. Revenue from all other segments increased slightly by 1% to 45.5 billion Chinese yuan, primarily contributed by Alibaba Health, Fliggy, Flushable, and Intelligent Information Platform. Adjusted EBITDA from all other segments improved to a loss of 1.2 billion Chinese yuan. Now speaking, Rob Lin, Head of Investor Relations. A translator will be available for the Q&A session. Please note that any discrepancies in translation will defer to our original management statement. If you have trouble hearing the translation, a transcript will be available on our website within 1 week. Let's begin the Q&A session. Goldman Sachs analyst Ronald Kung inquired, can management provide an update on the consumption trends since the June 18th shopping festival? Additionally, how does the company prioritize market share versus absolute profit levels for Taobao Tmall Group in the long term? Trudy Dai replied, the gradual recovery in the Chinese economy and government efforts to stimulate growth are driving consumption trends. Our focus on growing user scale, building a prosperous ecosystem, and driving technology-driven innovation is key to increasing market share and profitability. By investing in users and merchant growth, we create a positive cycle of higher revenues and reinvestment. While uncertainties lie ahead, our greatest certainty is the need to continue growing user and merchant scale. Maintaining leadership in these areas will lead to excellent mid to long-term profitability and market share. Citi analyst Alicia Yap inquired, could management provide more detailed information on the drivers behind the excellent growth numbers in DAOs and VIP members? Specifically, could you discuss the acquisition of new users, their origin, and how they compare to existing users in terms of spending behavior and power? Additionally, what is primarily driving the growth in VIP members? Is it higher purchase frequency or big-ticket item purchases? Do you anticipate these trends to continue into July? Lastly, considering the current weakness in the economy, how confident are you in the accuracy of our forecasts and our ability to achieve our objectives? Trudy Dai replied, our increase in daily active users, DAOs, can be attributed to a few key factors. Firstly, the improvement in the macroeconomic environment and the resurgence of consumer spending have played a significant role. Additionally, our focus on providing value for money offerings has resonated well with users. We have been able to expand our assortment of quality products at competitive prices, attracting new users from lower-tier cities, young people, and older consumers. During the 618 Shopping Festival, we observed a strong interest in value-for-money offerings, particularly among new young consumers. The launch of 3 million new brands on Tmall during this event has also contributed to increased sales in consumer electronics, appliances, apparel, and other categories. Regarding the 88 VIP members, they have been drawn to the new product launches and the expanded range of quality offerings. This has further fueled their engagement and contributed to overall sales growth. Morgan Stanley analyst Gary Yu inquired, when can we expect cloud revenue to accelerate despite corporate reluctance towards IT spending? Additionally, what is the timeline and roadmap for regulatory and monetization aspects of our recently launched AI offerings? Daniel Zhang replied, in China, the cloud infrastructure as a percentage of IT infrastructure is still relatively low compared to our US peers. This presents a significant growth opportunity for us. Additionally, the AI revolution has created incremental opportunities as companies seek to upgrade their services and applications using our AI capabilities. These companies require high-performance computing power, both for training and for providing AI services. These two factors are our primary long-term growth engines. Currently, we are experiencing some impact from the decline in demand post-pandemic, particularly in services related to remote work, remote education, and online streaming. We are also facing a decline in demand from one of our top customers. However, we are taking proactive measures to focus on public cloud growth and high-quality cloud services. With the right sales structure and customer profile, we are confident in our ability to achieve long-term sustainable growth. Regarding monetizing the AI opportunity, our best model is to have all AI companies and models utilize our Alibaba cloud infrastructure, which offers high performance and low-cost computing power. We not only run our own models on Ali Cloud but also help our cloud industry partners fine-tune and build their own models in their respective vertical industries and customized applications. This presents a significant opportunity for us, and we are committed to providing best-in-class services to support innovation on our cloud infrastructure. Furthermore, we believe in the power of ecosystem in the new AI era. We are expanding our community model scope to make a wide range of models available to developers and industry partners. We provide tools and applications to facilitate the use of these models, including open-source models. We will continue to upgrade our models and pursue an open-source strategy to encourage widespread adoption. The more people use models, the greater the demand for computing power. Barclays analyst Jiang Xiao inquired, Daniel, regarding AI, can you provide insights on the future landscape in China in the next 3 to 5 years? Specifically, how many successful foundational models do you anticipate, the mix between proprietary and open-source models, and the key factors that will determine the success or failure of different competitors in this period? Daniel Zhang replied, in this rapidly evolving era, many companies in China are working on large language models. There are two main development pathways for these companies. Alibaba, as a cloud provider, is focused on developing foundational models that can be universally applied and benefit a wide range of users. We are making these models available to developers and even considering open sourcing them. On the other hand, some companies may start with foundational models but quickly shift their focus to specific domains where they have expertise and access to high-quality data. These companies will develop specialized applications within those domains. It can be challenging to distinguish between companies working on large language models and those focusing on vertical models. However, it is important to note that the value of AI lies not just in its existence but in its potential to revolutionize existing applications and services across industries. At Alibaba, we believe that all our services can be reimagined and enhanced with AI, and the same holds true for players in other industries and sectors. Jefferies analyst Thomas Chong inquired, could you please provide insights on the competitive landscape and growth strategies in different regions for our international business? Additionally, how do you anticipate leveraging the strong performance of China to enhance the user experience and create synergies with our international operations? Daniel Zhang replied, we are pleased to report a strong quarter for our 8 business, our overseas digital commerce segment. Our strategies have shown signs of success and we believe this trend is sustainable. We are focused on finding our unique position in the global market, taking into account cultural and retail landscape differences in each country. Our advantage lies in our consolidated integrated supply chain, leveraging our strong coverage in China and our successful B2B business. We have a market strategy that focuses on cross-border in some businesses and local-to-local in others. We are also working on enhancing our logistics and service experience, offering a 5-day global delivery, which has proven to be a valuable user acquisition tool. By combining these efforts, we are creating strong synergies among our different business groups. We will continue to enhance our assortment strategies and logistics capabilities to ensure a positive customer experience, leveraging the unique strength of our price point from China supply. Mizuho Securities analyst James Lee inquired, can you comment on the important verticals for pursuing growth in the near term from a marketing perspective in relation to cloud computing? Daniel Zhang replied, cloud is relevant to all industries, but we prioritize internet companies, especially mobile internet companies in China. We have a big opportunity to help these companies with their digitalization and cloud infrastructure needs. Financial services is another important sector for us, given its size and complexity. We also focus on serving industries like automobile, particularly electric vehicle companies that are data-driven and digital native. In general, we prioritize industries with a higher level of digitization and those that have successfully undergone digital transformation. This is our focus and strategy. No more, analyst Jialong Shi inquired, could you please provide an update on the performance of Tmall and Taobao in terms of daily active users, DAUs, and revenues for the September quarter? Additionally, could you discuss the decline in margin year-on-year for the June quarter, specifically on Tmall Supermarket, Tmall, and Taobao? Thank you. Trudy Dai replied, on Tmall Supermarket, our 1P business is performing well, with improving profits. We have heavily invested in enhancing the user experience, including the introduction of half-day delivery in 20 cities in China. This has resulted in significant growth in user scale, orders, and satisfaction in those cities. While e-commerce is influenced by various factors like the macroeconomic environment and competition, our focus is on long-term development and surpassing ourselves. We are committed to investing in user scale, optimizing user experience, supporting merchant growth, and improving our services. With our extensive experience and insights in e-commerce, we are confident in maintaining our leadership position in user and merchant scale. These investments will drive future revenue and profit growth. Rob Lin replied, thank you for joining our earnings call today. If you have any additional questions, please don't hesitate to contact me or my team. We appreciate your participation and look forward to speaking with you again next quarter.